Hi, welcome to Neppy Invest. So, A2 Milk finally released their anticipated update to their profit guidance, and as expected, it was a profit downgrade. So, in this video, I'm going to just break down the announcement, just analyze it little bit by little bit. I'm a bit of a quandary, a bit of a conundrum right now because in anticipation of the release of this announcement, I was willing to sell out, but reading the announcement and just doing some raw numbers, I've decided just to hold for the time being. And one of the reasons I'm just going to hold for the time being is I believe this is a short-term issue. And sometimes the best time to buy in the company is when they're going through some short-term issues that they'll overcome and become a stronger organization when they come out of it. And I'm on the hope and belief, in fact, that A2 Milk will come out of this in a stronger position. So let's break down the announcement step by step. So management decided to take us through a bit of a tour in history in regards to their guidance. So they went all the way back to August of this year when they released their financial year 20 results. They did mention some weakness in pantry destocking and decrease in sales in the Daigou channel, but they also mentioned that there's going to be strong revenue growth supported by marketing and organizational capability. Now, the market didn't really believe that. There was a bit of a weakness in the share price. And the fact that the directors decided to sell out some of their stock a week after the results release didn't really help the share price weakness. Now, the market was, in a way, anticipating a profit downgrade, and they got what they anticipated in September. And the reason we had a profit downgrade from A2 Milk was a contraction beyond our previous expectations. So it seemed like their expectations they were probably being a bit over-optimistic in their expectations. So you can just see the numbers there in regards to their profits guidance for financial year 21. Assumptions. So one of the things I really don't like is when management of a company decide to make assumptions about the future results. And A2 Milk sure made a few assumptions in their September guidance announcement. So those three main assumptions were there was going to be a single channel issue. That's turned out to be wrong. The impact was going to be temporary, in fact, with the stabilization of COVID-19 around the country. They expected tourism with China to suddenly increase. The international students from China will suddenly come here, and for some reason they believe that, and that has not come to fruition. And they also mentioned there's going to be a significant increase in revenue in the second half of the financial year because of the improvement in the Daigou channel, and China label in business would continue to see growth. Now, I don't think management should make assumptions. Also think a management should always think of the worst case scenario and manage for that. And if a worst case scenario does come out to play, they're much better able to manage through that. And A2 Milk, I think, instead of thinking the worst case scenario, have just thought about the best case scenario, and that's going to play out just what they're thinking. And in this case, it didn't play out. And you can see that little snippet right below there that they've mentioned that the disruption in Daigou channel has proved to be more significant and protracted than was previously anticipated. Again, I think they were being overly optimistic, and if they were just thinking of the worst case scenario, they could have made better plans in anticipation of that. So the acceleration of recovery in recent week has been lower than they previously expected. Again, their expectations were probably too high too. And another thing I probably want to mention here is I really think it's a good idea to lower your expectations, especially when the situation affecting your business is out of your control. You just don't know how those things that are affecting your business, how they're going to be solved. In this case, it was Chinese tourism and international students in Australia. You just don't know when that's going to improve. And another reason why I think it's really good to lower your expectations is around the fact that it's much better to upgrade profit guidance than downgrade profit guidance. It's much better for the share price, much better for valuations, and it's much better for your own reputation. If you're known at continually upgrading expectations or guidance, then the market perceives you much better than if you continually downgrade guidance. Now, I've just mentioned before that this is not only affecting one channel, it's also affecting another channel. That's their cross-border e-commerce, CBEC. So it's also affecting that channel. So what they weren't expecting was this issue was affecting or going to be affecting two channels, and it is now affecting two channels. Now, in these little two snippets, finally we get management have lowered their expectations and now have got realistic expectations. So they just mentioned here they expect now travel restrictions that will continue to negatively impact reseller channel due to reduced travel between Australia and China through the remainder of financial year 21, with limited prospect of return of significant number of international students and tourists. So they've finally got realistic expectations, much lower expectations. That China tourism is not going to suddenly come back all of a sudden. International students aren't suddenly going to roar back to Australia. So finally, they've lowered their expectation, and this is actually good news. The other news or the other piece of information I really want to know and see in the future is whether they can reactivate the Daigou channel. And that's going to be the very important bit of information moving forward to whether they can regain some really significant growth in the next few years. But there's also some good news. Their mother and baby stores, or their China label in China, is doing very well. In fact, 40% growth. I'm just going to ignore this nothing statement they mentioned. It's a lot of buzzwords. It doesn't really mean anything for the business, in my opinion. But the other thing is their liquid milk division is performing very well. So in America, United States, they only have liquid milk business. They don't have infant formula, and you can see some strong first half growth in both these countries. In fact, I'm very curious to see how they perform in the United States moving forward. That's a significant growth market, I think, in the next, say, 5 to 10 years. So now we get to the crux of the issue. It's the updated guidance compared to the previous guidance. So the above numbers there is the updated guidance, and on the bottom there I've got the September guidance. You can see significant drops in numbers here in revenue for the first half and revenue for financial year, and EBITDA margins also going down. So just looking at group revenue for financial year, it's going down almost probably 300 to 400 million, which is a significant number. And that's all because of Daigou channel and e-commerce business. So in this slide, I'm just comparing expected financial year 21 results to financial year 20 results. So expectations are on the top there, in the middle there, financial year 20 results. So we are seeing numbers go down a fair bit from revenue 1.73 billion to between 1.44 and 1.5 billion. And based off margins, we can see that EBITDAs are going down from 550 million to between 374 to 435 million. So those numbers, even though they are down, they're still fairly high. And when I look at some valuation metrics, so I'm assuming a market cap at $10 is 7.4 billion. Now that means with cash on hand of about $700 million, the enterprise value is 6.7 billion. So the only really valuation metric I can look at based off the numbers they're giving us is looking at enterprise value divided by EBITDA. And that gives us the numbers between 15 and 18. So I want to compare that to the number before the downgrade and then to historical numbers the company has seen in the past 5 years. So historically, EV over EBITDA has been between 20 and 30, and now we're looking at numbers between 15 to 18, which means that valuation is a little bit cheaper than it was before, and that's based off the lack of growth this year. But if they return to growth or very similar growth levels that they've experienced in the last 5 years, right now would be a cheap level to buy in at. And even before the downgrade, the EV to EBITDA number was 17. So if the best case scenario, we are even seeing the price now at $10 cheaper than they were before the downgrade. So if you are a believer that good times will follow the next few years with A2 Milk, if you do believe this is a short-term issue, right now at $10 is a good time to buy into A2 Milk. So my question is to sell or hold. So before this announcement, I was thinking more than likely I'll sell. Now I'm thinking more than likely I'll hold. But it's all about China and the Daigou channel and whether they can successfully reactivate that. So there is some questions about that. And I think if they can't reactivate that channel successfully, the possibility of another downgrade is very a real thing. And I think another downgrade, they do say downgrades comes in threes. If there is another downgrade, we'll see another significant hit to the share price. I think actions moving forward is all dependent on whether you're a risk-averse investor or a risk-taking investor. If you're a risk-averse investor, probably the best action you can do is just to sell now and wait for confirmation that the Diago channel has been successfully reactivated. You might have to buy in at a higher price, but it's less risky. If you're more of a risk taker, I think just like I am, I think a good action is to hold. We're looking at good values, especially if growth can return to previous year's levels. It's fairly cheap at these levels. And probably the last thing I want to mention is, I think this is true for all companies, not only in Australia and New Zealand. A2 Milk is a New Zealand company. I think all around the rest of the world, I think companies need to become less reliant on China. Now, I don't want to say anything bad about China, but they are acting like a spoiled brat right now. And a spoiled brat always thinks whatever they want, they should get without question. And that's how China is acting right now. And unfortunately, Australia is not giving them what they want, and they're acting out on that. So when a spoiled brat is pretty unpredictable, is not really reliant, and at the moment, China is not really reliant or predictable. And I think if we become less reliant on China, it'll be good for the country and good for any company. And I know China relies a lot on China right now because it's highly profitable, especially the infant formula. So I think if they become less reliant on China, these sort of problems won't be in existence in the future, similar to what Treasury Wine Estates is going through right now, where they want to become less reliant on China. So that's all I'll say on China story right now. And that's all I'm going to say on A2 Milk with their announcement of their profit downgrade. So it's the second one they've done in 4 or 5 months. Let's hope it's not another one. At this stage, I'm more than likely just going to be holding, but I would not suggest to anyone they should sell or hold. I'm not in this business to advise people. I'm just telling you what I am willing to do, and maybe you can get some ideas about how you want to do it. So all our different strategies, all investors should have different strategies, and they should make decisions based off their strategies. And at this time, my strategies suggest I should just hold on to A2 Milk because I think this is a short-term issue, and I think they're going to come out of this in a better situation. And I think in, say, 3 or 4 years' time, they're going to be significantly higher share price than they are right now. Now, I'm not a professional advisor, so if you do need some, investing advice from a professional, make sure you seek out someone who is qualified and can speak to your own financial circumstances. That's all for today. Hope you have a good day. Hope you have a good weekend, and Merry Christmas if I don't see you again or talk to you again. Have a good day. Bye.